You still trading? CCL saved your day. Did you take it to the long side or to the short side? Long. Yeah, I traded CCL only to the short side today. I wanted to take it to the long side, but I have no idea why I didn't take it. I mean, I have some idea why I didn't take it to the to the long side. Look at the daily. It's just been bleeding, did some sort of reverse ABCD on the daily. This is not the best chart for me to consider taking it to long. I've taken it one good short on it. Second one was a loss, third one was a break even. So yeah, after that I just didn't trade it anymore. Just remove this, it's hot. Okay, let's, you took the same spot to the long side. Which one, this one or this one? Hey Holly. Like this one here to the long. This wasn't a bad long if you've taken it here to the long side. You took it at the breakup, yeah. I mean, an entry here or entry here, both would have been really good. This short for me, it was horrible, no idea why I did it. This one wasn't bad, it just didn't work out. Okay, we have enough trades in the trade review. Let's, on the off topic I mean. Oh Ryan, did you take it to the short side? CCL? Oh, long as well. Okay, I see. I think I'm the only one who shorted this thing today. It happened only once, unfortunately, and it was fast. It didn't even give me the move I really wanted to get, but it was still a decent one. Alright, so let's start with our trade review. I forgot whose trade was this. Let me check the name again. Noel. Okay, Noel, let's see your trade. This is your BA trade. You took it to the long side because it held the 20 moving average. That's the 20 moving average here on the 5-minute chart. Popped up, dropped, popped up again. Okay, I see. So it was just holding the 20 moving average on the 1-minute chart. And look at this, I actually like more the fact that it held the 9 and the 5, but basically they were the same thing. Look at this, it went up, it sold off, it was holding the 9 on the 5, and what's the best thing I like about it? Look at those bodies. Every time it's closing with a higher high and higher low. This is a bullish sign. So yes, it was bullish, then it tried to sell off and it was still closing bullish. You waited for some confirmation, you got your entry to the long side. This was a really early partial, right, Noel? Hey, Barl. Yeah, and remember this, when you are taking ABCD patterns, and I have been saying this a lot, but I will keep reminding you guys to always think about it when you are in a trade. Every time you are in a bull flag setup, in an ABCD pattern, in an ascending triangle setup, remember those setups are breakout setups. And what do I mean about breakout setups? I mean that they are meant for breakouts of the high of the day or of a particular level they are consolidating below. If you're going for that setup, then you need to just hold a little bit. I like your entry here looking at the 5-minute chart because it was at a new 5-minute high, but remember we need to see a setup on the 5-minute chart and we need to get a good entry on the 1-minute chart. Looking at this engulfing, I wouldn't really be so bullish, though I like the 5-minute chart. I like the fact that it's holding the 9 moving average, that it's making higher highs and higher lows. Now we just need a good entry on the 1-minute chart, right? And this is not a good candle here. This candle here, it formed this here, it's showing you some selling pressure. It's not the best one we would like to see, right? Especially after this small ABCD pattern and those bullish wicks right here. So I would give it at least 1 extra minute to see what it's going to do. Maybe in the next candle it will make a lower low and lower high on the 1 minute chart, then the setup will be ruined. Or the next candle is making a new high, which is a great place to take your position in. Since you are still in it, this candle was a confirmation for other traders to get in to this trade or into this setup. You could have just simply held instead of partialing. The add, yes, the add wasn't the best. Why is that? We don't add on the way up. I mean, we add on the way up if you add in like immediately in the same candle, but we don't add on the way up. Where do we add? We add after pullbacks on new highs or at the pullbacks. Because we don't know where it's going to pull back. Maybe it will just do a small pullback and then continue going up. And could you please repeat the list of breakout setups and conditions for them? Bull flag or bear flag, ABCD pattern, or ascending and descending triangles. Those are breakout setups. Where do we enter them? We enter them either closer to the support, somewhere here, or we enter them for the breakouts. We don't always enter at the breakout on those breakout setups. Let's assume that you are having here those bullish candles, okay? Then it's doing a huge pullback, okay? Now it's doing an ABCD pattern, right? It's making new highs. Now it's at the high of the day. You don't take it for the breakout of the high of the day right here. Why is that? Because this was already a huge move. So in this case, the best entry is just closer to the support if we have moving average right here. Now look at the difference. Same setup, okay? It's going up. It's pulling back. Look at this pullback. It's not so huge. It's going slowly up. You see this move right here. It wasn't huge. So in this case, when it's going up, you could just simply, when the price action gets tighter, take it for the breakout. You can either get it closer to the support or you can take it for the breakout. We don't always go for the breakout at the breakout area, especially if it already did a huge move before the breakout. Similar to here, you see this? This is the breakout area. This is an ascending triangle. It's going up. You have an ascending triangle right here. What are the best entries in this setup? The best entry here is closer to the support. Yes, this is the breakout area, but in this case on an ascending triangle, I will not enter at the breakout. I will hold for the breakout. I'll partial at the breakout, but I'm not entering at the breakout because it already did a huge move here. Now look at this here. You can take it for the breakout. Why is that? Because it did a pullback. It did a small move. You could see that it's uptrending. You see the ascending triangle. You see here one touch, second touch. Let's assume that this is third, even a fourth touch. On the top you have one touch, two touches, three touches. This is an ascending triangle. Now here you can either enter closer to the support or you can enter for the breakout for a move above 158. I hope that was clear. You are welcome. Okay, let's see your next trade. CCL. Hey Heezer. So CCL, look at this. You took it to the long side after the halt for a 5-minute upper range breakout or 5-minute breakout. Now this was a little bit risky. Why is that? It already did a huge move, around $1.25, with no pullbacks at all. And you took it. Yes, it looks like an ABCD pattern. Yes, this looks like a consolidation area, but this was really risky because it was already extended. I'm glad it worked out, but be careful of those type of setups because they will fail more than they work out, especially when they are extended with no pullbacks. What's the best place to enter? The best place to enter after the pullback. This was a great area to enter. This is a great area to enter. Now, this is not that bad. I told you that we don't go for the breakouts when it did a huge move, but this wasn't a huge move. You could see that the candles are small. The move is still huge, 75 cents. I would have entered at least a little bit before the breakout, or not at the breakout. But other than that, I think it was good. It was decent. And look at this. When it was here, I was looking at CCL as well, but I wasn't looking at it for the long side. Why is that? Because as I told you, it was already a huge move. Let me share my trade in CCL since we are at the topic. CCL. This is it here. This is the 1 minute chart. This is the 5 minute chart. So what's happened? CL opened up so bullish. I missed the move to the long side. I didn't take it to the long side here. I didn't take it to the long side here, though this looked like a small ABCD pattern here or small bull flag after the doji. But look at this. This is not small move, right? This is 80 cents move on an $11 stock, almost 10% of the stock price. This is a huge move. So I just decided not to take it, and I decided to wait for a short. Why did I wait for a short on this type of setup? Because I knew that the stock will not go straight up. I knew it's bullish in the day, maybe it will continue going higher, but stocks always pull back, and I tried to catch this moment of weakness, this moment of pullback, where I took it to the short side, put my stop loss, and I started partially down here. Why did I exit all here? Why didn't I exit at break even? Because the stock was so strong. It wasn't weak. It dropped down, it held some sort of support, and now it started forming an ABCD pattern, and I knew that some traders will start taking it to the long side, either here or a little bit after, or at least a new 5 minute high. That's why I just bailed on this thing here. For my parabolic reversal sal, I'm using the up extended and the down extended scanner. This is it. And by the way, Peter shares it in the chat room. You can check it there. You can see it's calling now FLI, TD, FLI, RCF. Let's take a quick look at them and see if they are actually extended. So TD, yeah, you could see it's starting to get extended, so it's starting to get interesting for reversal. Not now, a little bit later. FLIR, we said, right? You see this is really extended. Now this is really interesting for a short in a little bit. Maybe around 31.15. If it does a new 2 minute low or some sort of consolidation area. And it also called CF. But yeah, let's not take any trades right now, right? We're going to finish the trade review. If you are done with the trades before 1 p.m., we'll take some trades together. Tyler, I had some exceptions on some trades. I will talk about the exceptions in the success webinar once I'm done with it, or on some of my recaps. Yeah, I'll do a recap and I'll talk about why I took it without the new 2 minute low. Thank you, Tyler. So let's see your third trade. Now look at this. Here we have the same mistake. You took it to the short side on the way down, right? And yes, this was an opening range breakdown. But remember, when we are taking open range breakdowns, we want the stock to be one, close to VWAP. This is okay. Anyway, let's just say it should be close to VWAP. It should make a move smaller than the average true range, and then it does a new low. I could see that it did a new low. I'm not sure how much the average true range on it, but yeah, this wasn't a huge move. This was only 50 or 40 or $70, 70 cents move. But it was extended from VWAP. You see, it was around 50 cents away from VWAP. That's why it wasn't the best. In these cases, I usually wait for pullbacks. And what do I mean by pullback? I mean a new high. If I see a new high on this candle going here, and then it does a new low, that's where I would take it to the short side, but I wouldn't take stock to the short side on the way down. Yeah, the move should be less than the average true range. Why less than the average true range? Because if the move is at the average true range or above the average true range, we can't expect it to move much more than that. It can, but not always. Let's just see ABT quickly. And let's see the average true range on this thing. Average true range, let's add the average true range. And yeah, the average true range usually on normal days it's around $1.50, but yeah, lately it's been in place since February, so it's around $3 or $4. Okay, yeah, this wasn't bad actually. Yeah, this wasn't bad. I like it. I mean, the average true range is around $4, so it can make a move of $4 with before pullbacks, right? At the open, it did only 70 or 80 cents move, but still it was dropping since the pre-market. We should include this move there. Not always, but I can't really tell for sure. At the open, this was a small move, but it was already dropping from the pre-market with no pullbacks at that moment, you see? Then it pulled back and then it continued the downtrend. I'm not sure what price was this. 82.50 all the way to 80.50. Still less than the average true range. Yeah, this wasn't so bad. This wasn't so bad. It just didn't work out. It could have been better. Not A plus, definitely. There are reasons to take it and there are some reasons to avoid it. But it wasn't the worst trade ever. So you stopped out, then you took it again when it did a new low. Now look at this. This is revenge trading, right? You take it, you get subbed out, you re-enter at the same place, you get subbed out, then you re-enter again, and you get subbed out. Now, these type of trades we need to avoid. You have some criteria, you have some setup, right? You had the setup 1 minute open range breakdown, which you took it for. You took it for a 1 minute open range breakdown. That 1 minute open range breakdown failed out, and you got subbed out. Now, what are the reasons which made you take these trades, right? This is not 1 minute open range breakdown. This is just price action reading or revenge trading. We need to avoid this, right? The setup failed. Go and check for another setup. Let's see here. Good job. So let's see what you did here. I forget to check the names. Sorry. Ethan, and then Mark. So Ethan traded ABT. Was this also ABT reviewed? Yeah, it was ABT. You also took it for a 1 minute open range breakdown, but you partialed a little bit earlier, right? Because of which this was a winner for you. So you see, both took it for a 1 minute open range breakdown, but the entry here was a little bit earlier than the entry you've taken. You've taken it once it broke the 1 minute, right? And that's one of the disadvantages of taking the breakouts. If you get entries after the breakouts, you are definitely getting some slippage, or you're not getting filled like where you want to go. I know that you would have wanted to get filled right at the breakout, 1 cent before the candle, right? Or below the candle, but it's tough. If you get in for the breakout, most likely you'll get slippage and you will get bad entry. If you anticipate the breakout, like it went all the way up to VU up, it rejected VU up and started selling off, so you could anticipate that it's weak and it can break out, and that's why Ethan actually took it to the short side here. So yeah, not bad. Partials, rested break even. This is not bad. I know you've taken it for a reverse ABCD pattern. Looking just at the 5 minute chart, it was extended from the 9 moving average on the 5 minute chart, and remember what we said, it was just dropping from the pre-market. Yes, this is a pullback right here, but it's not enough clear. I would wait for it to get to the cross, to get to the 50 moving average, maybe hold it, make a new low, and after that I would take it. This also was an engulfing candle right here, and when I see pullbacks which are violent like this, I usually expect them either to continue going higher or to drop down and make a higher low and then break higher. So this higher low is the thing which scares me of taking these reverse ABCD patterns. Why is that? I take it for a reverse ABCD pattern, I take it at the new short, it goes a little bit in my direction, then it does a higher low and gets me stopped out. That's why I need a little bit more confirmation. And what's my confirmation in these type of setups? I talked about it in the success webinars. It's the M shape if I take it to the short side, or the W shape if I take it from the short side. So I want to see it breaking, going down, making a higher low, try to break up, make a higher high, reject the higher high, and make a new low. You see? I wouldn't be looking at it for a long side right here. I would be looking for a short side, similar to you. I like that you were short biased, and I like that you are looking for a short setup on a stock which is weak for a trend continuation. But we need to wait a little bit more for confirmations. I'm not sure why you got subbed out here. When you took it to the short side here, remember, you took it to the short side inside the range. If you are taking stocks inside the range for a move, our stop loss should be the breakout of the range. So in this case, you have the high of the range, you have the low of the range, you took it to the short side. Your stop loss definitely should be the high of the range, not so tight, because you're not going for the breakouts. You could see here it started forming some sort of an ascending triangle. You could see the range, you could see this level, which is being held here. Yeah, somewhere right here. I just drew it horribly. So look at this. If you get inside the range, somewhere here to the long side, let's say, somewhere here to the long side, I mean, here you would put it at least here, yes, but if you take it somewhere right here, your stop loss will be the range, right? Will be the range. If you get in at the breakout of the range, for example here, then you can tighten your stop loss and just put it at a new 1 minute low. Yeah, but I like that you manage your stop loss. Now this again was late. Remember this, we don't go in when the move already happened. We go in before the move happens. We go in as close, we go short as close as possible to the support. We go to the resistance, and we go long as close as possible to the support, just to get a good move. We don't get in the middle. We don't get in closer to the breakout unless you go in for the breakout. Let's see what you have here. Okay, Ethan, let me check that. Mark, you can send your trade again, but make sure to hide your account number. I will take a look at it. Mine, Louis uses 9, but you can use whatever you feel comfortable with. I like the 9 ATR, that's why I'm using it. So whose trade was this again? Let's see. Avi. So Avi traded Uber, and I like this. Look at this entry. It's close to view up, right? Small move right there. Where is it? Here. Small move, not a huge candle. Look at this, it didn't do a huge move in the pre-market to the downside, so this is just the beginning of the move. Took it for a 5-minute open range breakdown, close to view up. You see it was below view up, but it was really close to view up. I would just give it some room either here or here if I take it to the short side at the break. But yeah, that's just me. I don't know where you put your stop loss, but wherever you put it, it would be good because you went in for the breakout. One thing which could have just disturbed me is this week right here. I'm not sure how this looks like on the 1 minute chart, but yeah, it could have been a little bit disturbing. But look at this. Even with this week, you are still having a good risk to reward, a decent risk to reward. It might drop all the way to this level it held in the pre-market, all the way to the low of the day, or maybe to this daily level, and bounce out of that. But because you had a really good entry, you could just partial before those levels right there. And I could see you partial all the way to this moving average, did a breakdown, did some sort of double bottom with the second bot higher than the first one. You held all the way to your break even where you exit. So yeah, this was a really good Avi. Let's see your second trade, Avi. So you traded CCL. Now CCL was a little bit late. I see 5-minute open range breakdown as well, and I like this. Look at this. It didn't do a huge move in the pre-market to the downside. It was, yes, dropping, but not a really huge move. It did around 60 cents drop. It was close to view up, and you took it for a 5-minute open range breakdown. Now this was a little bit of a late entry. I know that we do take trades at the open range breakdowns. It could be below the body and it could be below the wick. I personally prefer them below the body. Why is that? Because that's more than enough. They do work well below the body. There is no need to just wait for the break of the wick. But still, I don't tell you that you should take it always at the body. If this works better for you, just stick to it. Another thing, you could see that this was a level which was held in the pre-market, right here. So taking it right at the break of the body will be also meaning the break of this level which it was holding. So there is no need to wait for this huge move. This is around 20 cents late entry, right? You could save those 20 cents and get an earlier entry. That will get you tighter stop loss, and that will give you much bigger reward on the way down. Mark, your account number is in the montage. You sent me a full screenshot, and your montage is there. And okay, I see, it's hidden now. Now let's see what you did there. So JNG setup parabolic reversal extended from, now look at this guy, he's trading the setup, that little bit risky, but I like it, and I like the risk to reward on this one. So he took it for a parabolic reversal extended from the 9 moving average on the 5-minute chart. You see the stock is downtrending, right? When we see a stock downtrending or uptrending, we should think of two possible ways of trading these type of setups. If it's uptrending and it's parabolic and it's so far from the 9 on the 5, we should not think of taking this thing to the long side. We think about taking it either for a reversal. If you are not confident with reversals, if you are not confident with counter trading, you avoid it. You don't chase it. You don't take it to the long side. You just wait, and you wait for a pullback, and after the pullback you get into the long side. So when the stock is uptrending and it's extended from the 9 moving average on the 5-minute chart, you either take it to the long side after the pullback, or you take it to the short side for the pullback to the 9 moving average. Now, they are not always going to the 9 moving average. Sometimes they're going a little bit above them, sometimes a little bit below them. I will share with you the trades which I have taken, the parabolic reversals, like right now, right after this review, and explain all of them separately here. Oh my god, my epic fan freezed. Sorry about this. Let me just do that, and let me open it again. And guys on YouTube, if you have any questions, feel free to ask. So look at these guys again. It was so extended from the 9 on the 5. It started holding some level right here. I see a dotted level right here, and it's 131 round number. It did a double bottom on the 1-minute chart, second bottom higher than the first one. Took it to the long side, and look at these guys. Most of the time, they go to the 9 moving average on the 5-minute chart. Now that's a problem I need to work on. I do take also earlier partials at the 3 hours, my first partial. But most of the time when they work out, they go to the 9 on the 5. So we need to learn holding to the 9 on the 5. That's not only you. I'm also to blame with that. But yeah, patience to hold to the 9 moving average on the 5-minute chart. This setup gives you a really good risk to reward. It's not, it looks normal right here, but if you look at the 5-minute chart, it was dropping from 137 to 131 with no pullbacks. It's around $2 far from the 9 moving average on the 5-minute chart. And if you take it to the long side with a 30-cent stop loss, 40-cent stop loss, and you get a $2 move, this would be what? 5-hour trade, right? Toast, there is no particular amount of money you really need to trade full time on average. We do advise trading with at least $5,000, but you need to practice first. Definitely at least 6 months in simulator paper trading. You don't need to go live immediately, because if you go live immediately, I don't want to say it, but I guarantee that these $5,000 will be just blown up. Day trading is not that easy, especially not at the beginning, but after practicing, I believe it's possible. Now let me guys show you the trades I've taken today for parabolic reversals. CCL we talked about, right? Now Tiffany, this is another trade I've taken today. You could see on the 5-minute chart a move from 128 to 129.90 with no pullbacks. Let's see the 1-minute chart and the 2-minute chart. You see it's just going up, going up, going up with no pullbacks. And look at this. Around here, even if we have a new 2-minute low, we shouldn't take it to the short side. Why is that? It's still close to the 9 moving average. You can take it to the short side somewhere right here with the target, the 9 moving average and the 5-minute chart. The risk to reward is just not there. We wait, right? And now I see that it's going up. Now that I see that the stock is going up, I have two setups in my mind. I either take it to the short side with a stop loss, to the short side all the way to the 9 moving average on the 5-minute chart, or I wait for a pullback. I make sure that it's holding the 9 on the 5. I take it on a new 5-minute high to the long side. Unfortunately, this didn't work out. It continued dumping, and unfortunately, I don't have anything left in my pocket here to hold. But yeah, look at this now. What do we see? We see a stock which is moving parabolically to the long side. And what was I waiting for? The simplest setup. Stock extended from the 9 on the 5, and then a new 2-minute low. You could see that it did no new 2-minute low, no new 2-minute low, just going straight up, and this was the first new 2-minute low. What did I love the most about this thing? I love the most that it actually broke at the first time, and then it immediately got sold off. So this was a quick sell off. This was a sign of weakness. I took it to the short side here. And what's my stop loss on these particular setups? My stop loss is not the high of the week. I never put my stop loss at the high of the week. Because I know when these setups work out, they immediately work out. I just tighten my stop loss, and I put my stop loss only at 129.70. 10-cent stop loss, first partial at 129.30. This is 3-hour move where I took my first partial. Then 129.20. A 4-hour move. This was a hotkey mistake. I didn't mean to partial here. And then I just exited the rest at the new 5-minute high. Why did I exit at the new 5-minute high? Because the stock is bullish. The stock is strong. When I took it to the short side here, I didn't take it to the short side because I believe that it will go all the way down to VWAP or because it's ready for a reversal. By the moment I took it to the short side, I took it only for a pullback. I knew that buyers, people who stepped into the long side anywhere here, people who chased it somewhere here, they will start taking their partials or they will start bailing on their positions, and the stock will do a pullback. So the move I aimed for was simply a pullback, not a reversal. I got my pullback and I exited. Then you could continue watching it, waiting for other reversal setup, for bigger reversal pattern. But yeah, I mean, or just look at it for an ABCD pattern and a trend continuation. Let me see what else I've actually traded on this particular step. I just don't remember all the stocks I've traded. Give me 1 second to check. So look at this. I'll share with you all the trades I've taken there. NAM, same thing. But NAM, unfortunately, it did work out, but it got me stopped out at the beginning. So look at this. NAM, it's going up, extended from the 9 moving average on the 5-minute chart. Oh, Ryan, it's the up extended and the down extended scanner. Stocks are just appearing here. Peter is sharing them. I just take a look at any stock which is appearing here. And if it's extended, I continue watching it for a reversal. And look at this, it's going up, extended from the 9 and the 5 below a previous day close. I took it to the short side at the new 2-minute low, put my stop loss right here, got some slippage on it, and I got subbed out. It did work out after that, and it did go to the 9 and the 5. So the idea was right, but the entry was a little bit early, or I don't think it was early. I think it just didn't work out because I just followed my rules here. I took it at the new 2-minute low. I should have re-entered, but I didn't. Another trade I've taken was OK. You could see this one here. Now this was a level 2 on time and sales play. I took it only on a new 1-minute candle, and this is one of the exceptions. If I see a stock which is wide bar and then inside it a small red bar candle, I don't wait for a new 2-minute low. I take it only on a new 1-minute low. That's one of the exceptions. The best thing is always to wait for a new 2-minute low, but there are some exceptions and I'll be talking about them when I am taking some sort of trades. So that's it, going up, extended from the 9 and the 5, took it to the short side, and then I just started partially. Now look at these guys. Most of the time they go to the 9 and the 5. I should learn holding to the 9 and the 5. You could see my entry 22.55, my stop loss 22.63, so it's around 8 cents stop loss, and it went all the way to 21.90. This is more than 7-hour trade if I learn to hold to the 9 and the 5. Still learning, but I hope I'll be better on this one. I don't take smaller trades. I take my original share size on these type of reversals. Why are you taking it on a new 1-minute low? It's one of the exceptions. Wide bar candle. Inside it, small red bar candle, and then a new low. Especially that this candle was good looking doji. And I think I've taken one more trade if I'm not sure. NEM, TIF, OK, CCL. Okay, yeah, that was it. Those were, oh yeah, no more than that. I lost YouTube. Okay, now let's get back to the trade review. The exception condition. Okay, one of the exception conditions to see a wide bar stock is uptrending on the 1 minute chart. You could see those 1 minute candles, they are small. Not so small, decent. But then I'm having a huge candle right here. Inside it, small red candle. And then a new low. This is one of the exceptions. Another exception is the volume. Sometimes the stock is going up. You're having a daily level here, and then on the 1 minute chart, getting closer to the daily level, it gets an increasing volume, like crazy volume like this, like bigger than all these previous volume, and it's called climactic volume. This setup is also called climactic reversals. Once you see this kind of volume, so crazy, increasing on a new candle, then you see a new low or some sort of struggling. I sometimes even take it without the new 1 minute lows. I see this crazy volume, I see it starting to struggle, making a new low, and then I take it to the short side. So this is one of the other exceptions. I can't go through all the exceptions right now, we'll run out of time, but we'll talk about them with me taking more trades similar to this one. So yeah, let's continue with the trade review. You're welcome. So let's see your CCL trade, J-Bone. Setup, let's see. ABCD, the type C, and I see the type C. Why is that? It did a parabolic pullback. Where is the 5 minute chart or the 1 minute chart? That was a huge pullback. This was the first leg up. So we can take it right here at the D level. It is an ABCD pattern theoretically, but when looking at this, usually I'm afraid of taking the first leg up. I usually wait for the W shape. That's the W shape, and that's the good confirmation entry. Indicators, very strong stock, 40% retracement, non-violent pullback, 2 dojis, entry new 1 minute high, stop loss below the first doji week. What was your stop loss below the first doji week? This one? Yeah, I think it's this one. You drew it right there. You wanted for a 2-to-1 breakout. Why didn't you take the trade? It was extended on the 5 minute chart. So let's see that. 10:05, 10:05. It wasn't so extended on the 5 minute chart. If you look at this, it's not so much extended. It's around 30 cents or 25 cents. It can't just hug the 9 on the 5. Yeah, you don't need to see it hugging literally the 9 moving average on the 5 minute chart. The key is for it not to be extended from the 5. And remember this, you need to see a touch. If it goes up and then it goes back to the 9, bounces out of it and continues going higher, then you can enter anywhere on the way up. You don't take it to the long side here when it's going up, when it's extended from the 9 and the 5. But after it already did the pullback, got closer to the 9 and then continued going higher, you can take it to the long side. Because the pullback already happened and now it can just simply continue going higher. You get in after the pullbacks. Thank you, Ryan. So let's see what you did here. AAL. Unfortunately, I can't see what happened before or after. Let's check AAL on my DAS. AAL. What did OK do? It got, look at these guys. It did an ABCD pattern, it broke up, but look at this again. It's starting to go parabolically. It's starting to go so far from the 9 moving average on the 5 minute chart. It's doing a new 2 minute low here where you could take it to the short side. No, this you can't take to the short side. Why is that? It's here. It's still not so far from the 9 and the 5. Then it's doing a new 2 minute low when it's extended from the 9 on the 5 minute chart, and it just works out. Yeah, this was the perfect one, and look at this. This is amazing. Like those wicks right here, selling pressure, selling pressure, selling pressure, new 2 minute low, take it to the short side, tighten your stop loss. Why tightening it? Because when those setups work out, they work out immediately. They don't look back. Yeah, this was amazing. I don't know. It's fine. Keyser extended is I should get at least 3 R's out of the move. If it's close to the 9 on the 5 and I take it on a new low somewhere right here, my stop loss somewhere right here, I see visually that my risk to reward isn't there. If it goes to the 9 on the 5, it will be 1.5 maximum, 2 maximum. I need to get at least 3 R's, and even 3 R's sometimes I don't take. I need to get more than that in these type of setups. If I get much more, and when will I get much more? If it's enough extended from the 9 and the 5, like visually. AMD. AMD is interesting. I like it. Look at this. It's getting far from the 9 and the 5, but the trend is stable. You could see that this range right here from the 9 and the 5, it's enough stable. It's not... Now it's getting crazy. I like it, but it's not so much. I need it a little bit more just to give me good risk to reward. Maybe if it drops 15 cents more around this daily level, which might happen, it will be really good. And look at this 15-minute chart. It's just bleeding down. No pullbacks yet. No pullbacks yet. And stocks usually do a pullback on the downtrend. This is the beginning of the move where it's hugging the 9. This is the breakout area where it's starting to trend. Then it's getting crazy. FOMO getting into traders. People start chasing them. And that's where the move usually ends and starts doing a pullback. So a new 2-minute high, this would be interesting. So what stock was I watching? Yeah, I wanted to check AAL for... It was 10.05 trade for someone. Let's get back to 10.05. That's it, 10.05. Let's check the 5-minute chart. And look at these guys. AAL extended from the 9 on the 5-minute chart. Look at this drop. It's so far from the 9 moving average on the 5-minute chart at 9.50. Let me get this back. Unfortunately, I wouldn't have taken this setup. Why is that? The 2-minute candle is so huge. So basically, these are wide bar 2-minute candles. I can't take it to the long side with 15 or 20 cents stop loss. The risk to reward is just not there. 20 cents is the move to the 9 on the 5. If this doji was here, like small doji with 5 cents, 6 cents stop loss, I would take it on a new high all the way to the 9 on the 5, which happened. And now let's see what our trader did here. Took it to the long side at around 10.05. Yeah, 10.05. That was your entry to the long side. 10.05. Now this is not a bad entry if you took it here or here. Why is that? As you said, extended from the 9 on the 5. It did a double bot, second bot higher than the first one. You take it to the long side somewhere here. You put your stop loss somewhere here. It's 10 cents. 10 cents is more decent on these type of trades. And you can go all the way to the 9 on the 5-minute chart, getting at least 1 hour out of this. If you get in for reversals or for moves which give you at least 1 hour, that's good. Less than 1 hour, definitely better avoid them. Now let's see this Valentine. Streets, it's not one of the criteria. Double bottoms, second bottom higher than the first one. And to be honest, I love double bottoms with second bottom lower than the first one. Why is that? Because you could see that it did break the low of the day, but it wasn't weak enough to sell off. It got back into the range. So these type of double bottoms is the best one I love. A double bottom is second one lower than the first one. Perfect. So ABT, let's see what you did here on ABT. And look at this. Remember guys what we said? This is that setup we talked about a little bit before. It did an ascending triangle. You could take it for the breakout of the ascending triangle with the stop loss new 1-minute high. Why? Because now you're getting in at the breakout. Once it breaks out, you just get your stop loss at a new 1-minute low. If he entered somewhere right here, somewhere here. Stop inside the range. Stop loss should be the low of the range. Now this was amazing. Good job, Valentine. Now let's see Zen. Zen traded Uber. Now that's a lot of trades. Zen, so you took it to the short side here. Now this, I see what you saw there and it's not bad. I like it. One thing though, I would have entered here. I wouldn't have entered here. Why is that? Huge drop. I love that. Now I'm short biased. Pullback, amazing. First leg down, I don't take it. After parabolic pullbacks, I wait for an M shape. I see an M shape. I see a reverse hammer or reverse hammer. A new low, that's the entry. Now this is a little bit late, right? You tried it one more time here, but yeah, it was already late. Like around here, you never know what's going to happen. It did a higher low. When you get into these setups, they should immediately work out and just break down. If it just makes higher low, you could see that it's more strong than weak because of this higher low. Because of this, I wouldn't take it to the short side unless it does a lower high. You see what I mean? Like we're looking at waves, like first wave at the top, first wave at the downside, second wave at the top, second wave at the downside, third wave on the top, third wave on the downside, right? And look at this. What do we see? We see a downtrend here. We see sort of weakness here. So all the way here, it was looking good for the downside. Now it's getting back up. You see? So now it's the trend is sort of broken. Unless it does a new low, something like this, I wouldn't take it to the long side. I want to see lower waves, lower waves. This is tough without drawing at the beginning, but the more you see it, the easier it will become, definitely. Here you could see that it did break that wave, it did break this pennant, and you noticed it, you saw it, like higher lows, lower highs, and it did break up above this pennant right here. You took it to the long side, which was amazing. I love it. This would have been the perfect entry, as you said. Why is that? Because we don't take it on the way up. We usually wait for pullbacks just to define where to put our stop losses. If you see this and then you see the breakout, you take it to the long side. I personally would put my stop loss here. But after seeing this consolidation right here, you could take it to the long side and move your stop loss right here. But yeah, that was a good one. Yes, then for the first one, it wasn't bad. This was a good short. The first short was good. It was a little bit late. You had the double confirmation here. It was amazing, but it was a little bit late for an entry. But it was good. Definitely. Now this was late. Why is that? This is where we actually start looking for parabolic reversals. Stock is going up. Stock is extended from the 9 on the 5. We wait for confirmation to the short all the way to the 9 on the 5. Yeah, and look at this. There was a lot of revenge trading. You tried to go in for the breakout. But remember, to go into ABCD patterns, that's why I made that rule. You see the 9 moving average in the 5-minute chart? If I want to take stock, which is strong, to the long side, I wouldn't take it here. And I wouldn't take it here. And I wouldn't take it here. Remember on the ABCD webinar what we said? When the stock is gapping or has gap below the 9 on the 5, it can just chop around till it gets into the 9 on the 5, and only after that it can continue going higher. So what you should have done there is just be patient. You should have just waited for it to get to the 9 on the 5. If it breaks out, now this is not so bad at least. You could have had only one loss on it. It went to the 9 on the 5, but it actually broke it and dropped down. Why do I have this 9 on the 5 rule? By the way, guys, this could have worked. I'm not saying that this can't work, and I can't say I didn't say that these can't work. Stocks which are consolidating in a gap so far from the 9 on the 5, they still can work and they still can shoot higher, but they fail more than they work out. That's why I just try to avoid them. Now let's see what market did. Yeah, this trade we checked. Now we have JC. So JC, let's see what he did. And look at these guys. Let's see what was the time. What time was this? 12:15. Okay, now this is not the setup, but this is still a good one. 12.15. Now I thought it was an entry somewhere here when it was extended of the 9 and the 5. Wait, I can't figure it out actually. Let's read it. Really tired, slept badly, worked long, stressful day. You were watching trade review to the up extended scanners. It's called FLIR. Also, SPY was selling off hard. Okay, so I see that FLIR, it was extended. Let's see FLIR on my chart here on the 5-minute chart. I want to see it. FLIR at 12.15. Yeah, look at these guys. You see this? This is the 15-minute chart. This is the 5-minute chart. It's just going up and it's extended of the 9 moving average on the 5-minute chart. That's why JC was looking at this trade to the short side. Now let's see. Look at these guys. This is the trade which the stock which we actually mentioned at the beginning of our trade review session. It was extended from the 9 and the 5. It went up, no pullbacks, no new low. It did some sort of ABCD pattern. New 2-minute low here. This would have been the perfect entry, but yeah, this was amazing as well. I think I would have done that as well. Took it to the short side, really tight stop loss, and look at these guys. It just dropped down all the way to the 9 and the 5, and I bet even more than the 9 and the 5. So you see this small risk and this great reward. This is why I love these type of setups. Good job taking this trade, by the way. Let's see what else the scanner is calling us. Maybe if there is something nice, we might take one live trade here. Yes, FLIR. FLIR was a good one. So GM maybe not so good looking. YUMC not so good looking. ASUR not the best. TSCO not the best. PINC not the best. Yeah, so there is nothing really interesting right now, unfortunately. So have a good day, Hizar. If you guys don't have any questions, we can end this for today, and I'll still be in the chat room. If I see any good parabolic reversal, any good setup, I will definitely call it in there. Guys on YouTube, if you don't have any questions, have a great day, and if you have any questions, you can email me at ayman@beerbulltraders.com. I typed it in there, and yeah, that's it. Yeah, J-Bon, I'll do a success webinar with them. I actually started doing it. Thank you, everyone, and have a great day. XSplit.